One thing that Trump, AOC, and Bernie Sanders actually agree on: capping credit card interest rates at 10%. But is it a good idea? Or will it backfire? Let's break it down. Credit card debt is skyrocketing, and interest rates are at record highs. The average APR on a credit card, over 21%. That means for every $1,000 of credit card debt, you're paying $210 a year just in interest. Enter the new proposal. Lawmakers from both sides are pushing a bill to cap credit card interest at 10%. That's less than half the current average rate. But is this a financial lifesaver or a dangerous move? Here's what's happening. A bipartisan group of politicians, including Progressive Representative Alexandria Ocasio-Cortez, MAGA-aligned Representative Anna Paulina Luna, and Bernie Sanders, are pushing for a 10% interest rate cap on credit cards. Even Trump has mentioned he'd support a cap. Why? Because banks and credit card companies are making record profits while Americans struggle with debt. So, what would happen if this law passed? Let's break it down. You'd save thousands. If you have a $5,000 balance, instead of paying over $1,000 in interest each year, you'd pay only $500 or less. Credit card companies make too much already. Banks have all-time high profit margins. They can afford to cut interest rates. It could prevent people from falling into deeper debt. High interest rates make it nearly impossible to pay off balances for millions of Americans. But not so fast. Economists warn that capping credit card rates could backfire. Here's why. Banks might stop lending to risky borrowers. If a bank can't make enough money from high-risk customers, they won't issue credit cards to them at all. It could push people into worse debt options. If someone can't get a credit card, they might turn to payday loans, which have insane interest rates of 300 to 400%. A 10% cap might be too low. Some suggest a 25% or 30% cap instead to balance fairness with financial stability. So, what does this mean for you? Let's say you have a $5,000 credit card balance and only make minimum payments. At 21% interest, you'd pay about $1,100 in interest per year. But at 10%, you'd only pay $500 or less. That's a huge difference, but the real question is, would banks still offer credit at 10%? If not, many Americans could be shut out of borrowing completely. So, should there be a cap? And if so, at what rate? Should it be 10%, 25%, 35%? Or should the government stay out of it completely? This is a huge debate in finance, and your opinion matters. Now, we want to hear from you. Should credit card interest be capped? Let us know in the comments, and don't forget to like, subscribe, and share this video if you found it helpful. Stay tuned for more finance and economic breakdowns. See you next time.